What's up, visionaries? Before we get into it, I want to get a quick note here. I'm working toward the goal of hitting 100,000 subscribers. And if this channel helps you think more clearly about investing and money, hitting the like button and subscribing really helps this content reach people who need it. So, all right, let's get into today's topic. The problem that nobody wants to admit is most investors are prisoner of the moment, at least the dialogue on social media. They react to whatever is loud right now, whatever is trending today. Whatever just had a big move is what everyone's talking about. And that's one of the fastest ways to lose clarity as an investor. When you decide to invest, there's a choice you have to make early on, even if you don't like it. Are you short term or are you long term? Most beginning investors have to be long term, not because it sounds disciplined, but because the math forces you to be. So the urgency is real, but the market does not care. See, I understand the urgency. Some of us need money and we need it now, like JG Wentworth. Some of you feel behind. Some of you are trying to fix real problems. That is completely human and understandable. But the market does not move on urgency or cater to your life. It doesn't move on need. It doesn't move on how badly you want things to change. That's where internet gurus make their money. They sell speed, they sell certainty, they sell the idea of pulling money out of the market is easy and predictable. But I'm going to tell you the truth. It isn't. Markets reward patience, positioning, and time, not desperation. So, I always go on Crypto X, and this is what I'm seeing right now. Right now, if you spend any time on X or Crypto X, Crypto Twitter, whatever you want to call it, gold is outperforming, silver is running, crypto is dead again. The prisoner of the moment thinking. And I want to be clear about how I approach this. See, I don't like making assets compete with each other. I don't believe in choosing one thing and pretending everything else is useless. You see, I'm somebody who likes diversification. See, I like precious metals. I like real estate. I like crypto. I like stocks and index fund. Why? Because I'm not trying to win an argument online and look innovative. I'm trying to build my net worth. And if you study money at all, the objective is simple. You gotta have assets over liabilities. I treat myself like my own hedge fund manager, my own business entity. Each asset plays a role. Each one has strength. Each one behaves differently across cycles. Gold doesn't need to beat Bitcoin. Bitcoin doesn't need to replace real estate. Stocks don't need to kill everything else. The world can coexist. So let's talk numbers, right? The honest numbers. That said, facts matters. Over the last 10 years, Bitcoin has outperformed precious metals. Back in early 2016, Bitcoin was trading around 430. Here in early 2026, even with pullbacks and volatility, it's hovering around $88,000 to $92,000. That's a massive long-term gain. Around $1,100 to $1,200 in early 2016. Now pushing around $4,600. That's a strong performance, roughly 300 to 400%. Silver, around $15 back then, now pushing north of 90. That's also strong, good return on investment. But none of them come close to Bitcoin's decade-long performance. See, I don't know how to get you guys out of this prisoner of the moment thinking. There's a pattern. Precious metals run hard short term. Bitcoin pulls back. People declare a winner. Then the cycle shifts, short-term charts dominate attention, long-term context disappear. And that's how people sell early, buy late, and stay frustrated because they're reacting instead of positioning. See, Bitcoin is more volatile. This is true. That volatility is the cost of its upside. Precious metals are steadier. They protect purchasing power, they hedge uncertainty. But see, both can exist in the same portfolio. The mistake is letting short-term performance rewrite long-term reality. See, I don't really want anything from you or to gain anything from you. But what I want you to take away, if you're a new investor, you don't get to live inside of today's headline. You have to think in years, not weeks. You don't chase what's hot. You build exposure to what compounds. And you stop expecting the market to fix short-term problems it was never designed to solve. You may need to read a few more books on financial literacy. So now, I'll leave you with this. It isn't gold versus Bitcoin. It's not crypto versus anything. All of that is market employees to keep you emotional. It's about refusing to be emotionally dragged around by cycles. Bitcoin has been the strongest long term performer over the last decade, and that doesn't mean that it replaces everything either. It means it earns a seat at the table. Now, if this video helped you think more clearly, hitting the like button helps. YouTube shows this content to people who are asking the same questions that you are. Subscribing helps me move closer to my goal of 100,000 subscribers so I can keep making long form content like this for people who actually want substance. And as always, I want a conversation, not complicity and agreement. Drop your thoughts in the comments. Are you thinking long term or short term right now? And are you being honest with yourself about that? I read the comments. And until then, visionaries, I'll see you on the next one.